Welcome back. As promised, we have Rajan Sethuraman, the CEO at LatentView Analytics, joining us to talk to us about their earnings, because in the first half of the year, we have seen a growth of around 20%. But Sethu, when we started the year, you had a growth target of at least 25%. Are you expecting growth to accelerate in the second half of the year, or are you expecting this kind of growth rate to continue?
Yeah, I mean, while we hope for a significant acceleration, at this time, the demand scenario is still a little weak. We are, however, energized by the fact that the number of open conversations and the opportunities in the pipeline is more than double of where we were at the same time last year. So there's a great deal of interest, but signing new deals and getting things underway, that is still quite sluggish. Opportunities spending a lot more time on the pipeline, and closures are delayed. What has aided the growth in the last quarter and even in the first quarter has been incremental work that we have won from existing stakeholders. And that again is energizing, because it means that the work we are doing for our current stakeholders is important and critical, that they choose to continue that and even add to that, right, during the current economic scenario as well. But of course, we need to see a lot more momentum in terms of getting back to the 25% growth trajectory.
Right, so this is Vinny joining in the conversation as well. So, would you actually say the growth will be 15 to 20% or at least 20% and above that?
I can't put my finger on a particular number at this point in time. What we do know is that quarter 3 is going to be better than what we have done in quarter 2 by probably a couple of percentages. Now, what will happen in quarter 4 is also predicated on our ability to secure extensions to all the work. As you know, our clients operate on a calendar year as their fiscal. So most of the extensions that will give us the revenue in our Q4, they will all happen in the December-January timeframe. So we'll be in a better position to indicate how the year will end and what are the prospects for the next year when we close quarter 3. So that's when I'll be able to give you better guidance. What I can say now, though, is that Q3 will definitely be better than Q2.
Okay, so Q3 will be definitely better than Q2. At least that's some directional sense that we are getting from you, Rajan. But what about margins? Because, of course, this year, because it was a year of investment, we have seen a sharp decline on a year-on-year basis. But by the end of the year, at least, you expect yourself to come back to that 25 to 28% range?
28%, I think, will be very difficult. 25 to 28 is the range in which we had wanted to operate. And this year, we were hoping to get closer to the 25% rate when we were in quarter 1 and quarter 2. But given the current demand trajectory, I think it's going to take some more time to get back to the 25% mark. It'll keep improving. You would have seen that quarter 2 is already better than what we did in quarter 1. And if, as I said earlier, our revenue pickup is even better in quarter 3, then the margin will also improve. A lot of the investments that we wanted to make are baked in. So it'll be proportionate only. And therefore, if the revenue growth comes in, then we'll start seeing some of the operating leverage which will push us. I think my sense is that it'll start getting closer to a 23% kind of a mark if things continue on the same trajectory. If things improve even faster, then we can get there faster.
Also, just what about the acquisitions? Any update on that? What's in the pipeline? Any conversations there? Conversions there, beg your pardon.
Yeah, absolutely. In fact, in the last quarter, I had indicated that we were in advanced stages of discussions with one opportunity, and another one was looking very promising. Unfortunately, the one which was in a bit more of an advanced stage, they decided to pursue a growth capital strategy rather than a majority stake sale. Also because of valuation differences, expectation differences. At this point in time, there is one additional opportunity that we have progressed significantly and which is in the due diligence stage. There is still work that remains, but we expect that all of that due diligence work should get completed by the end of this calendar year. So therefore, when we meet again at the end of quarter 3, we should have an update. Till now, there are no red flags. So we are moving in the right direction. In addition to that, there are another half dozen opportunities that are in the pipeline at various stages of evaluation. Our hope is also that we should have something concluded before the end of this fiscal.
Okay, Rajan, on that note, we let you go. Appreciate you joining us on the show.